Good morning and welcome to today's pre-market video on the Nifty Expiry. Now, all who are watching today, I hope you watched the previous pre-market videos of this week. Anyone who watched them will have made good money in mid-cap Nifty, Fin Nifty and also Bank Nifty. Now, coming to today's trading session. Now, usually I always discuss news in a good manner in each video, but there is not much to say on the news front. This is across the world, PMI data are releasing. But they're not, as I said in the previous videos, they're not going to hold much significance, as this week everyone is waiting for two things, FOMC minutes and Jackson Hole. Now, as I record this the night before, by morning we will have the FOMC minutes, and I believe it will be showing inflation is easing, which will set us up for September's rate cut as expected. Now, we'll have to see basically the employment numbers plus inflation to try to gauge whether it's 50 BPS or 25 BPS. I believe 25 basis points rate cut is already priced into the world markets, so it will not have much of an effect. 50 basis points is not priced, and if it starts hinting towards that, then us and all other world markets will start moving up. So on the news front, that, and yes, I have seen also on the news front the issue about SEBI. SEBI has released, done the FNO or whatever paper, and I've seen news that the BSE and NSE have agreed on a portion of those things, but no one is saying what portion. So that has put a lot of dilemma in traders' minds, in brokers' minds, in basically everyone who's doing the stock market in an active way. So that is another news which I believe will affect the market when it comes clearer. If it is on the very silly points, then it's going to affect the market very negatively. If it turns out to be relevant, then the market will not bother. In fact, it will go up because of that. So two things to pay attention: FOMC minutes, which will by tomorrow morning will be out, and this nonsense which has been created by the SEBI for the stock market. Now, coming to the Nifty Expiry. Now, the levels which I'm going to share for the Nifty Expiry are very similar to how I shared it for the Bank Nifty. This is as for, let's say, mid-cap Nifty and Fin Nifty, I had shared 3 levels above, 3 levels below, as it was a simple trading session. But the Bank Nifty I had shared 5 above, 5 below. Nifty is similar because of where the Nifty has come from. This is the Nifty number one has two big gap downs in the range. It has been largely range bound. Yes, there have been small pockets of moves, but those have been very small. Majority of the time, it has been range bound, and as I said this whole week to option buyers, be careful as you'll be ground into mincemeat. That has happened in a lot of this week, as a lot of option buyers will have got beaten up whether they're trading the Bank Nifty or the Nifty. This week was purely an option sellers market due to the severe amount of range boundness. Now, I think in today's trading session or Friday's trading session, things should start improving for option buyers. This is as number one, the FOMC thing will be dealt with today, and then Jackson Hole will also start getting dealt with. Plus, these expiries have passed, so I expect option buyers to start getting more meaty moves today, and more meaty than today, tomorrow. But still, be very careful. This is as the range boundness can kill, and I don't believe anyone who's doing option buying for the Nifty today should touch today's options. This is as whatever you do, the decay will most likely end up eating you if you're a slow trader. If you're not fast in decision making, the decay will end up cannibalizing you. So if you're trading Nifty for day trading, you better go to next week's options. They'll be more expensive, but there's not much an option. You either make profits or you make a complete loss. So that's for that. Now, coming to the levels. Now, these are roughly the levels me and clients have been using this week. As I've always said, Nifty and Bank Nifty is the bread and butter for me and clients, whether it's on positional option selling or so basically intraday trading via option buys or option sells. Now, how am I going to handle today's trading session? Now, if we look at the Nifty, it had gone into a range bound limp mode yesterday, and this is the same resistance level which me and clients are using yesterday. So first hurdle is going to be 24,820, but I think there's a high probability of us going through it due to only one reason. I think by the morning when the FOMC minutes are released, they're going to be positive. So most likely we're going to break this and go towards the first hurdle of 24,900, 24,950. If we stop there, simple. If we manage to break above 24,950, then 25,080 is an easy target according to me. So I believe right now the trade is pretty simple, but pay special attention to resistance at 24,900 to 24,950 and 25,080 and 24,150 on the upside. Now, if we do not break 24,820, then expect a box trend between 24,820 and 24,640. But if we break 24,820 and go to this resistance zone, then expect the box range between 24,720 to 4 and 24,950. So how am I going to trade it as an option buy? I've said if you break those levels, you go to the targeted next level. Now as an option seller, how I'm going to trade it? I'm going to be a bit cautious because we have had three very profitable days this week in option selling. But now I will look to sell calls. I'll most likely sell calls first. I will look to sell calls. If you're a risky option seller, above 24,900 and 24,950. If you're risky. If you're a risk averse option seller, then go above 24,080 or something like 25,050 can be done. A bit below 24,080, but in that zone. So you can sell calls above that. I will be personally using 24,900 to 24,950 as I do carry more risk. And I am fast in taking a switch if things are not going my way. So on the call sell, I'll be doing that. On the put sells, if you're a risky option seller, then 24,640 and below. If you're a cautious one, 24,560 and below. I will most likely go aggressive on this side and aggressive on this side, but I will first enter call sells, then I'll enter put sells. This is, I think, any up move will end up having a drop towards 24,720, and that is when I will start trying to look for an opportunity to sell puts. Now, how will I look for an opportunity? I'm going to want to see that this trend catcher, you've seen how flat it went yesterday here. I'll want to see the same continuing and the same utter confusion in the volume build-up. That happens, that's when I will enter put sells. So that's how I'm going to trade. I'm going to trade both call and put sells. So if you're risky, then you want to follow my trade plan, then but do keep stops. If you get out of the box range, you don't want to get whipsawed. As expiry day, things can go nasty very fast if you're an option seller and you're not quick on the button. So that's it for today's video. Thank you for watching, and any questions you can send me or put them in the comment section below, and any suggestions too. Also, if you want certain stocks analyzed, drop them in the comment section below, and on certain days they can be covered. Thank you.